exchange. Congratulations on the license, and of course, one of the emerging player in the Hong Kong scene. We have Sandeep, VP of Tokenized Assets from Paxos. Of course, one of the OG, the stablecoin space. And last but not least, please welcome Kyle, the Stacks Asia, Executive Director of Stacks Foundation in Asia. All right, so Alice is going to be easy on everyone, but please really just give us, the real question to this. Where's the real deal with Bitcoin stablecoins? So over to Alice.
Thank you. Thank you for staying. I know that it's the last panel of this event and you are looking forward to some drinks, but hopefully that you can stay and listen to our interesting panel today. Standing because I want to move. Only have 1 minute, sorry. So I will leave it to the panel first to introduce themselves. You have 1 minute each to introduce what you do and by yourself. Yeah. So start with that.
Thanks, Alice. I'm Sam. I'm the COO of Hong Kong West, the first license exchange in Hong Kong. What we are doing is actually like what other exchanges is doing. Pretty much trading, OTC and tokenization of security token or RWA, and maybe in the future move into staking and other things as well. Yeah, that's what I'm doing right now.
Hi everyone, Sandeep here. I look after the Paxos business for Asia Pacific, based out of Singapore. I was glad to be here because Alice invited me, and specifically the topic is very pertinent. It's about Bitcoin and stablecoins and where is the future and where are the real use cases. So Paxos is known for the last 10 years being a stablecoin issuer, and we have had many successful stablecoin launches, starting with USDP, but PYUSD. But what we are really looking forward to is the global US dollar, which we launched at Singapore FinTech Festival last year. That's what we call USDG. And we are looking forward to making that as a democratized stablecoin rewarding capabilities that every partner, everyone who is part of the ecosystem enjoys the benefit of utility of stablecoins. So we'll talk more in the questions, but thank you.
Hi everybody, I'm Kyle. I'm the Executive Director of the Stacks Asia Foundation. From the Bitcoin side of this panel, Stacks was one of the original Bitcoin layers. We were the first to bring programmability and smart contracts to Bitcoin, and also today have helped push a lot of this industry forward as well from a Bitcoin perspective. Myself, I used to run our ecosystem fund. I was the largest investor in the industry when it came to investing in companies building on Bitcoin, and today work tirelessly around the world to educate a lot of institutional investors as to what's happening in Bitcoin, where the opportunities are when it comes to new products like stablecoins, yields, staking, and much more that we're going to be talking about today as well.
Thank you so much for that. Very impressive profiles. I feel so inadequate sitting here. Okay, so I'm going to dive right into questions, and my questions can be a little bit deep dive. So hopefully that all of the audience can learn something new today and super practical as well. My first question will be for Kai. Put your water out, sorry. So Bitcoin, why do you think institutions and governments are buying Bitcoin or setting up Bitcoin reserves for themselves?
Okay, so maybe let's separate that. So why are institutions and governments buying Bitcoin? From an institutional perspective, Bitcoin has been the key asset or the primary asset most institutions know. It is the most they're familiar with, and it has the most either data or insight available to them in one way or another. Also, it represents an asset they're very familiar with when it comes to gold as well. So something that they can easily resonate from an institutional side. However, we talk about institutions like those that are endowments, crypto, hedge funds, or investors and the like are starting to allocate more and more into not just Bitcoin as an asset, but also into other assets being built on Bitcoin, so tokenized assets as well, whether that's wrapped Bitcoin or other bridged assets. They are now starting to take a position because for the first time, we now have Bitcoin in a place where it doesn't just sit dormant. Bitcoin can be utilized. It can start to move, it can start to earn, it can start to yield, you can start to lend off of it. Whereas for the last almost 15 years, Bitcoin has sat on an L1 and hasn't done anything else other than price appreciation. So institutions now are starting to look at Bitcoin differently than they have in the past 15 years. They're looking at this as a productive, as a utilizing asset that they can have on their books to earn something more. Governments are starting to do that as well. We've got a dramatic shift when it comes to macroeconomics in the world. Inflation is a common topic in every conversation and every dinner table right now. And Bitcoin is something that governments are looking at is, can this be a new digital version of, again, what some governments were backed by when it came to gold or otherwise as well. So it's a new treasury-based asset that also now, for the first time, is starting to have utility in ways that it didn't before.
Okay, another question for you. Sorry, I'm targeting you at the moment. Well, because you sounds like you have a lot of knowledge about Bitcoin, right? So how does Bitcoin role in emerging markets differ from its role in developed market? We have US and Bitcoin, maybe like developing markets.
Okay, so this is a good question. So before 2024, the way that most institutions or retail, for that matter, bought Bitcoin was usually on an exchange, centralized or decentralized, or through a wallet or a provider. In 2024, in January, we saw the launch of 10 and then up to a dozen, so 12 different ETF products on US stock market, or stock exchanges. That provided a way that completed a full circle of opportunity that anybody at any age with any technical knowledge could suddenly participate in owning Bitcoin in whatever way they wanted to. So if you're super technical, you could buy Bitcoin off an exchange, you could buy it off decentralized exchanges. If you were less technical, but you're still in the industry, you could buy off a centralized exchange. And if you just wanted to add it into your IRA or your traditional market portfolio, you can now call up Charles Schwab, Vanguard, or Fidelity or others and purchase it. So now anyone from the age of 5 to 95 could purchase Bitcoin for the first time. In the US, that was a huge deal, and it also came with a ton of liquidity and backing behind it. And shortly thereafter, we saw the launch of a few more ETFs in emerging markets that didn't take as much in terms of interest and liquidity, because frankly, it all went to the ones that we saw with big names behind it, between BlackRock and Van Eck and others that are traditional finance companies that many trusted. So year to date, we saw almost 40 billion, it was about 36 billion in total, go into ETFs in 1 year, which is a huge, huge market growth and a big milestone for the entire market. But emerging markets now are starting to see that same type of growth and inflows as well. The US took it first in terms of the size, just because, again, I think the traditional names that were backing those ETFs versus those that came a little bit later that maybe just didn't have as much weight behind them at the time.
Anybody have any contribution to that? Do you have any opinions on Bitcoin reserve? Sam, yes?
Yes, I pretty much agree what Clive just mentioned. I think I just add on because of the deflation and things. I also add on maybe the government ought to involve more, because the technology has been changing rapidly. Now it's moving to Web3 and more tokenization. So it just for some of the governments, it just shows that they are on the top of other people, and they're on the top of other countries that we want to be the pioneer of the kind of token or crypto industry. So that's why they changed it. I want to develop a Bitcoin reserve, things like that. Yeah. So that is just that on this point.
Sounds very formal to me from Yadav to Yadav. I have a question about stablecoin now. So Sandeep, please. What are the key use cases of stablecoins from an investment perspective, and how do they help investors?
So, many people know stablecoin mainly for two use cases. One is how does it useful for an investment perspective, and other is the utility. So as we are focusing on the investment aspect, the biggest focus for any stablecoin issuer comes to be from the yield from the reserve management. And that collateralized reserve that generates the yield depends on how you manage that. Is it highly liquid? Is it bankruptcy remote? Which is what Paxos focus on. And depending on that, you can get different kinds of APY. So there are stable coins in the market who can promise you, because they do a basket of investments instead of liquid investments, they might promise you very large yields, but they could be risky because the risk factor goes high. So from an investment point of view, it all depends on the issuer, how they manage their reserves. Is it effective risk-free rate, or is it more investment into areas where they can actually generate a higher yield? The ones which tend to take the market to the next level is the ones where it's highly liquid, because when it comes to off-ramping the stable coins, highly liquid ones tend to get greater adoption. So between investment and utility, long-term utility will be a better use for stable coins, but at a shorter term, the yield that you generate out of that is the one which helps with the investments of anyone who participates in it.
Thank you so much for explaining different use cases. Now, I want to deep dive into Hong Kong, and especially on the stablecoin investment, because I'm very curious about this market. I'm not from Hong Kong, by the way. Yeah. So, again, the same question. So, what are the key use cases of stablecoins from an investment perspective that you are seeing today? Because you are the one actually interacting with the end users, and you are helping with the local market. So, we would like to hear more about the landscape of Hong Kong.
For Hong Kong, I think there's a Hong Kong issue of stablecoin bills, and then there's a free player got in, and then so far I understand they are issuing Hong Kong dollar stablecoin. So yeah, there's only like Hong Kong dollars still at the moment. So from the investment perspective, for example, I engaged with another trading company. They're using quite a lot of stablecoin for the global trade. So that's why I agree with Sandeep just mentioned about it's a lot of global trade using stablecoin. If you're looking for investment, then actually touch on your another question is talking about the corporate treasury. For example, those corporation they used to receive US dollar, and then they put in the bank to fix deposit, but then now they receive a lot of USD stablecoin. They can go to DeFi, they can generate yield, and then they can stake in. And then they can do a lot of things, and then it's much more easier than I think the return will be more higher than putting in the bank for a fixed deposit for example 5% return or things like that. So that is but for stablecoin I'm still thinking from the investment perspective that's not really a big use case. It's just for parking for example, if you generate yield from a DeFi and then you park your money into the stablecoin, it's just a money market fund kind of thing, park the money. And then if you see another opportunity, then you can go to invest DeFi and then get some return. And then that's kind of the usage from the stablecoin from my understanding. So yeah.
So from what you are saying, it's not stablecoin, but maybe Bitcoin?
I think it's stablecoin because the company actually I engage is a trading company. They can easily receive like $4 million stablecoin. But right now they don't engage in corporate treasury, kind of like putting those stablecoin. They receive it, they can generate interest. They can put it into, for example, like staking or DeFi or doing other things that can be generate some yield as well. Yeah.
But like from the Hong Kong market, you see that demand.
At the moment, I don't think see anyone doing it. It's still. At least maybe some of the very Web3 players they are doing for like the investment side, DeFi or staking, but for really local Hong Kong local company, trading company, traditional trading company, I don't think they know about this thing. seriously. A lot of them they don't understand. They can use stablecoin to trade, but then they don't really know what is DeFi or what is it, or how can you generate like 20% new per year. They don't understand. I think there's a lot of education there that to go for. Even the regulator, they don't understand.
Whoops. Well, it sounds like Paxos has a lot of work to do to educate about the market. Okay, come back to Bitcoin.
Yeah.
Please. I have a use case that I think I need to deep dive into this particular use case. Lending. Bitcoin-backed lending. So how does Bitcoin-backed lending compare to traditional credit markets?
That's an interesting question. I was not fully prepared for on the credit market side. I think, yeah, so maybe come back to Sam's point and then maybe back into this. So from what I know happening here in Hong Kong, so crypto, family offices, traditional venture, as well as those trading, stablecoins, if they were not already a part of their thesis and mandate, are now becoming a part of that. And a lot of that is, to sum up a lot of our points today, and those in the panels before, the world is changing very rapidly. And from an investment standpoint, that is also changing. Investment managers, whether institution, family office, or otherwise, are having to look to new vehicles, to new assets, and the like to generate returns. And the conversations I've been having this week in Hong Kong and otherwise, if again, stables wasn't a part of their investment thesis or their portfolio, they are now. And the next thing, because of people like us and those here at the event today, are taking that next step in learning and educating themselves, or bringing on a new partner into the fund to take it into lending, to take it into yield, to then take the last step and taking it into DeFi as well. I'm also seeing that not just here in Hong Kong or in Asia, but also in the UAE, that stables is one part of that basket. We're now entering the same with Bitcoin and being able to say, hey, I have BTC, we've held BTC as a fund, we now want to do something and not just lend it out. We also want to earn a yield off of it, and then we want to take it into BitFi or Bitcoin DeFi and start earning further off of it. But to Sam's point as well, there's a lot more education that still needs to be done. But I can tell you without a doubt right now, the majority of managers, if they're managing any type of asset or portfolio, crypto or otherwise, are entering into building a crypto portfolio. Starting with stables because they're easy, fundamental, easy on-ramps. Paxos shout out right there. But then they are taking that next step and starting to do something with their Bitcoin and then getting yields and loans off of it. So coming back to Bitcoin lending. Bitcoin lending right now is produced, what I'm seeing, in a few different ways. There's a ton of different protocols that are starting to come to market that will allow someone who has BTC on the L1, wrap it, bring it up into their protocol, and actually lend it out and earn a yield back from it. Two, there are wrapped assets. You can just do that natively and not have to go to a secondary protocol or application. There's also a number of asset managers and trading firms out there right now that will allow you to actually collateralize your Bitcoin and lend it out to exchanges, lend it out to custodians, lend it out to the greater market and industry, or to governments as well if they're looking to take a position, and provide you a stable, either stablecoin return or a Bitcoin return as well. So right now, that is how I'm seeing the Bitcoin lending market shape out. How does that compare to credit markets? Credit markets right now, that's still a very traditional, very well-known business, to Sam's point. It is something understood. It is very much a part of one's portfolio, but the lending side with Bitcoin is just starting to open up. And I think that that's a huge wave. If I can give you one stat, last year, 2024, year to date, so from the beginning of the year to the end of the year, the Bitcoin ecosystem grew from about 300 million in total value, 20x. That by the end of the year, we are at $6.5 billion in value. The majority of that value came from August to the end of the year. That is about a third at that time of Bitcoin's total market cap in momentum. If we look at the size of a similar ecosystem on Ethereum, it's about a 12% ratio in market cap. The opportunity that sits with Bitcoin and Bitcoin-based products is about $200 and $240 billion, which is larger than the stablecoin market today. Where Bitcoin is going and the products, whether it's lending, borrowing, yielding, or anything else that we're talking about today, the opportunity has literally just begun. If we throw in some Bitcoin-backed stables, tokenized assets, and today's market activity, we're just over 1% of total Bitcoin market cap being utilized. When you start to unlock 10 to 12% of that, the things that we're talking about are just the very, 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 very beginning. Chapter 0, we barely open up the first page of the book. So that's a long-winded version of the difference between the two.
There you go, smart money investment. Who doesn't love double and triple, like dippings, right? So, I mean, I hope that everybody here really understand the benefits of double and then triple like dippings. I think you probably should have an educational channel for us. So Sam, I'll come back to that Bitcoin back lending. Right? It's a very, very specific topic. Do you see that trend happening in Hong Kong?
Yeah, I think it happened long time ago before FTX collapsed. So a lot of like Fiero and then big name, they are lending a lot of like Bitcoin. The collateral is Bitcoin and they're lending a lot of money out. And then they are very big, they grow very big. And I think the trend is there because I mean, if you compare with traditional credit market, I think the liquidity is really different because Bitcoin is all over the place and then you can do it 24/7. It compared with traditional credit market, if you like, for example, you collateral a building and then you have to do a lot of document and then if you want to sell it, and it's very difficult in Hong Kong right now. So that's why I think if you get Bitcoin, that can easily like turn into USDT or USDC, and then you can turn it right away, just one click. So that's why I think the lending landscape is totally different. It's just very quick and then it's efficient, and also the interest generated is maybe more. I don't know, but it depends on the lender how they want to get the profit. Yeah, that's what I see.
I'll add one more thing because I had a conversation with a fund outside just before our panel about this. One of the big areas that's starting to open up around Bitcoin lending is something very traditional as well, and that's around mortgages and traditional loans. Because right now in most places around the world, your crypto assets, specifically Bitcoin, is not necessarily a recognized asset that could be collateralized for a mortgage, for instance. And we're starting to see that become more and more recognized both on a traditional financial market side to then also financial institutions of saying, okay, this is the Bitcoin, this is the day, this is the mark, this is the price, this is what it equals in a stable coin. We can then put a price value on that and provide you an actual mortgage or a loan based on that price point at that time. And so whether it's Hong Kong, whether it's San Francisco, whether it's London, whether it's Dubai, it doesn't matter. We're starting to see this as a trend move in the overall global markets because the amount of Bitcoin that sits right now in the world is more than most realize. There's 47.7 million wallets right now today active with more than $1 BTC in them. That BTC has the ability to be lended or to have as a collateral. We're just not there yet from the whole unlock that potential could be.
Definitely hope that Asia will not miss out on all of these trends. But regulation is also a very big issue in this as well. So hopefully that we can catch up from the regulators' point of view. Okay, thank you so much for the insight. I move to stablecoin. Okay. See, I always think you guys like wanting the difference. You can prepare yourself, even when my question is like super difficult and in depth. Okay, stablecoin as a cross-border payment. My favorite topic because that's what I do, right? So we move from stablecoin for cross-border payment. But to be honest with you, it's really painful. It's so freaking painful to move stablecoin from one country to another. We try our best. We build our infrastructure. We have all of the merchants. We are the payment acquirer, payment processors. But moving money from the west to the east using stablecoin, we heard a lot of noises on LinkedIn, on socials about, oh my god, how much money have been moved, and we were just like wondering what could we do wrong. Like literally, why is it so painful for us to do it? So, Sandeep, what are the real benefits of using stablecoin for cross-border payment at the moment? May I ask? Because the traditional system is already working really well.
Yeah.
Right? You are moving by transfer wire from west to the east, happening in within seconds. Okay, the fee is a little bit high, maybe 1% or 1.5%, but it's already fast, already instant, and we have decades of traditional finance building this. Why do we need to use stablecoin?
That's a question I asked before joining Paxos. So, why do we need stable coins is a question that I get almost on a daily basis, and especially because I tend to focus a lot on enterprises and traditional finance companies. The solution lies more on the aspect is when you are doing cross-border, stable coins is an abstraction layer on top of your traditional finance. And as an abstraction layer, I believe we are not at that mature level where the on-ramp, off-ramp is smooth. So typically the friction comes is when you want to take fiat, go to stable, move it across borders, bring it back to fiat. So this on-off-ramp is the things that needs to become smoother as we go forward. The ideal world is everyone, the circulation remains in stable coins, and then it's smooth as butter and it's low cost, fast, efficient, and outside of banking hours movement. So then you don't have to do it. So traditional rails actually work very well because they have matured over the years, but it's a patchwork, and everyone has tried to extract maximum efficiency from the patchwork of traditional rails. We are not there with stable coins where we can say it's the best workflows without friction. So we have to solve on-off-ramp with the right partners, and we have to increase adoption and liquidity for stable coins so that you don't have to do as much on-off-ramp. And I can share some examples maybe once we go deeper.
Alright, so I think what we need to really fix is everybody got stablecoins, and then we can just move stablecoins around easily, right? That's it. No more fiat. I mean, you still need fiat. Sorry, bank. I think our time is up. I wish that we can have another hour, but we don't have time. The organizer say no. I'm gonna throw in the last difficult questions. Okay, you probably don't have the answers. You can have it for another open topic. But my question is regulation the biggest threat at the moment, or are there bigger concerns like centralization risk for Bitcoin and stablecoin? So, with the condition at the moment, do you think that regulation is the biggest risk, or the centralizations of Bitcoin and stablecoins are the biggest risk? Because everybody is setting up ETF, everybody is buying Bitcoin reserve, so it's soon going to be centralized-ish, right? So, which one would be the biggest threat? I'm gonna start. Sam? Yes? You don't have to have the answer right now, but I mean.
From my perspective, definitely it's not I think regulation there is good because it enable a sustainable growth of the stablecoin or other different product. Right now we're in discussion with a lot of regulators to talk about expand our product scope. For example, not talking about DeFi, for example, staking or just now you mentioned about lending and all that. I think the regulator is keep on open up to just suggestions. So they understand that the product is very limited in Hong Kong still right now. So they are open up to a lot of suggestions that what product you want to offer, and then have to conduct due diligence on them, and then make sure that investors don't lose the money. And then we said that we guarantee we doesn't. Just kidding. We just say that. Yeah, that's why I think regulation is probably from my perspective is a good way because we are licensed. Yeah. So
So I'll give a quick view. From a stablecoin perspective, regulation is both a necessity, but at the same time, what we see is an impediment for adoption and growth. What we are looking at Paxos is we want to operate in a regulated, trusted environment, get the regulators along with us, handhold them, show them the benefits. As you said, show me the money, right? The money is there, but we can't let them run a while. So let's take the regulation along. So they're not a risk, I would say it makes things slower, but it's better to work with them rather than against it.